Good morning, I'm Catherine Ross, and I'm here live with Jim Cramer. We're practicing social distancing, so Jim is joining us via Skype. Jim, what's top of mind for you this morning?
Social dissonance. I like that. What's top of mind is that I said in several real money pieces, which I think people should subscribe to if you haven't by now. I've done over 40,000 blog entries. I said that we should take out 2,300. Why? Because that's the level we hit intraday on December 24th when we thought that Powell was going to put us in recession. And we hit that level. Okay. Now, are we going to hit that level and then bounce big? I think we hit that level. We tested again, and then I'm not sure we make it because now we're requiring an 11:30 conference call from the president, where they don't just talk about health. They have to talk about the health of the financial health of the nation. They have to talk about equity in terms of helping the workers, but also making so that, say, Boeing doesn't go out of business, national treasure, defense. So many things are in flux. Number one is that from the corporate side, we have to see the Federal Reserve get approval to be able to buy all the corporates at once. That has to happen. That's number one. Number two is we need to see a line of credit for Boeing and for the aerospace suppliers, 60 billion, because there are 17,000 suppliers, 2 million workers. And then number three is we deal with restaurant and retail and travel and leisure. There, I haven't come up with a plan yet. I'm working on it.
Bill Ackman tweeted this morning that we should have a global spring break, which would be a 30-day rent, interest, and tax holiday for all. Is that feasible, or is it already happening, Jim?
I think that's nice. Lord of the Flies kind of answer. You see, there are lots of people, fixed income seniors, don't have any way to make money. There's lots of young people can't make money. 100 million people need money, and it's great to take a hiatus if it were a sporting event. I'm going to say something that, I'll probably take heat on, but rich people think like that. Okay, that's how rich people think. It's the same way that the rich people in administration are saying, we need a payroll tax cut. I mean, I fired, we had to fire a bunch of people at a restaurant. So I'm not going to fire them and try to keep them on. But most of the restaurants are hand to mouth, and you can say that they have a hiatus, maybe they don't have to pay any bills, whatever. That's not it. They need money, and they need money because we want the fabric to hold. Okay, we want the center to hold. Because what's going to happen is if we beat this thing, which we are, we're going to get to where FedEx was describing China last night, which is back to business. At Starbucks today, it's going to be on Mad Money, back to business in China. And if we beat the thing, holy cow, we could have an unbelievable opportunity. So what I'm going to be talking about on our conference call today is the notion of how do you triage, how do you decide, what the worst is going to be first when things snap back, because there's so much of a cash infusion here. I'm thinking about Disney. And so you have to balance between selling the bad, buying the good that's temporarily hobbled, and buying the good that's actually doing well. And we'll explore all of those because we have all three. It's a time where I did not write the call because at 11, when the president will speak 11:30. All right. And what I have to leave room is that if he says, we're going to do a big, my plan, right? We're going to put whatever it takes into an entity, and that entity is going to be able to buy what the corporate government's, the Fed buys govies, and the Fed buys mortgage, and then the Fed buys corporates. So we take the credit side off. And then on the equity side, what we do is we have the president come up with a rational plan with Secretary Mnuchin and Congress to create, say, we start with a $2 trillion 30-year. We're going to make money the moment we do the 30-year. And then we try to get as much money into people's hands and save the base of the country. And make sure that Boeing doesn't go under. We identify the big companies that employ the most people. Maybe we do a cutoff. If they employ, more than 50 people, we take care of them. Or maybe we reduce it to 25, or maybe we just make it so that the people who are working at 25, we go to Intuit and say, what do? We go to Social Security, IRS. But they have an entity that does these things rapid fire, like a lightning round, and then we're going to solve the coronavirus, and nobody is going to be displaced or go and be hungry for 30 days. So these things have to happen, and I'm hoping they happen at 11:30, or the market's going to take a real hit. And if it takes a real hit, we're going to be ready either way.
And you can tune in to Jim's conference call at actionalertsplus.com at 11:45 a.m. this morning. Jim, This stimulus package of $1 trillion, is this going to be enough for the market, or does
No,
Wall Street need to
no.
see
I mean,
more?
what's enough? I keep thinking what Dr. Fauci said yesterday, where people said this is going to be 45 days, and he was just saying, "Look, if I say 45 days and it goes 47 days, whatever, I'm going to be wrong." We're going to look back in history, and we're going to say either why didn't people think bigger, because what it led to were consequences that have not been unleashed in this country in a very long time. Uh, no one's going to say, "I cannot believe we thought so big for something that was so small." When you do it that way, when you think of it that way, what happens is if the government invests in all these industries and we solve the virus, the government's going to clean up. I mean, one of the new ones, my friend Matt Horween, my writing partner, just suggested, we have gigantic sums in Social Security, in Medicare. It's all invested. Well, let's divert some of that into corporates. Into corporate bonds we have to, or even into equity. Other countries do that. Why can't we do that? And the answer, Catherine, is very interesting. The reason why we can't do that is this: we're not willing to think big enough. And when you're not willing to think big enough, you make mistakes. I mean, I always come back to General Marshall, because General Marshall is one of my heroes. He goes around the room, FDR goes around the room about what's needed, and we are the 17th largest standing army. 2 years before, we had to beat, along with the Russians, the Germans, and the Japanese. And everyone just said, "Well, we're fine." Like the army says, "We're fine." This says we're fine. Everyone says we're fine because they're afraid of FDR. And he says to the president, "We need as many planes as we can get. We need as many bombers as we can get. We need aircraft. We need everything we can." He didn't put a number on it. And later on, he was then addressed by FDR, and FDR called him by his first name, George. And he made it clear after that his name was General Marshall, and he was not going to be called George. We're in that moment where there's got to be someone in that room who says, "Mr. President, I don't care what you said. This is what we need," and is not afraid of being fired, because I think there's too much tyranny in the White House. You need someone like a General Marshall who says, "You know what? I'm going to speak up and say what's needed. The worst that happens is I'm fired." Because what we need is a Marshall approach to World War II and a Marshall Plan after World War II, because there's a man who wasn't afraid to think big.
Let's talk about Boeing, which is asking for $60 billion from the government. But I want to take this back from...
No, it's not. Boeing is asking for $60 billion for the chain of suppliers, including Boeing. There is a story going around that says that they're asking for $60 billion. Spoke to them directly. They made it very clear to me that story's false. What they want to be, everybody should know, is that there's a huge supply chain of 17,000 people, 17,000 companies, 2 million people, and that money needs to be spread along the supply chain, because Boeing can't pay them all. So it's about paying everybody. Boeing gets a huge amount of parts, and Boeing doesn't have enough money to be able to pay for all the parts. So you could say, "Listen, let's give it to Boeing. Let's give it to the suppliers." Boeing just wants the suppliers to stay alive. Because if a supplier goes down, or a supplier, there's someone on the assembly line gets COVID, there has to be a shift, there has to be a change, whatever it takes. But they're being tainted here by people who are thinking, they sound very greedy on the 60 bill, but that's what they imagine the supply chain needs to stay in business. So let's be clear. Just because they're such great guys, and speaking of people with history, they won. A lot of people feel they won World War II. So now people think that they're incapable of building a 737 MAX, but they built a B-29, not a great plane, but a pretty good plane. And won the Pacific War.
I'm glad that you clarified that. I'm actually really glad that you clarified that, because we were seeing Boeing falling tremendously in trading today. I mean, look, the stock fell from its 52-week high of nearly 400. It was at 398, and now it's trading around $104. So what should investors be doing with that, especially now that you clarified the story?
It doesn't matter unless the president says we're going to take an investment in Boeing. We take their problems seriously, and what we're going to do is we're going to buy 20% of the company, fully knowing, by the way, with Social Security money. Fully knowing, by the way, that the moment they do that, the 20%, the company's worth a lot more, and the Social Security benefits tremendously. And then they get approval for the MAX, and we beat the coronavirus, and the world continues with people who kept their jobs, didn't lose their jobs, unlike the restaurants, by the way, where basically they've been told to stop. And to some degree, I want to take Boeing off the table and supply chain off the table so we can address the very serious problem of companies that have been told to stop being companies by entities that have the ability to close them. And it is vital that Mnuchin follows up on his pledge for business interruption insurance, because when you're running a company like that we do, my wife and I do, when you're running a company and you get the word that you have to close the company, well, I don't want a credit line to keep paying people, so then I have to pay the credit line back if we reopen. I want insurance, business interruption insurance, so I can keep the people on the payroll, so that when we beat COVID, we can open up again. And without that, we're not going to open up again. We can't afford it. I don't want a credit line to keep my workers, because we're not going to make enough money to pay the credit line back. We run it for cash, and it's really vital for them to reach back to maybe their younger days, or to knowing people who work and weren't rich. It's a shame that so many people are rich in the government, because you need like somebody like Bill Clinton, who wasn't, to recognize that a waiter doesn't, the 1099 employee, that person needs help, and you're not going to help that person by giving me the money. You got to give it to them, not me, because they're the ones who aren't working. And I want them to be solvent so that they can work with me when we reopen. But if you don't understand the food chain, if you actually don't understand the way small business works, then I think you say, oh yeah, let's just give money to Cramer. No, it doesn't work. I don't want a credit line. I don't want it. I don't want to owe even more money. And I think that what's a shame is that you hear that kind of lack of creativity thinking by traditional people who have dealt with business and don't know history. And this is a history moment, and meaning that you got to study FDR, meaning that you got to study World War II. You have to study Lincoln. You have to study them, because you have to realize that all of those people did things that were not legal, so to speak. I mean, Lend-Lease wasn't legal, so to speak. The FDR made a couple of mistakes. He confiscated all the gold, but he also created a bunch of entities that turned out to be illegal. But he created them because he didn't want to just stand by idly and have the American people think, it's time for a revolution. We need to be communist. And you have to think like that. And I think fools think small, and great people think big.
I'm glad that you made that point, because that is something that I've heard from a lot of restaurant owners, of they don't want to take out these credit lines because they will owe this in the future. So thank you for making that point. And Jim, I know that you need to get to your Action Alerts Plus call, but I do have one final question for you. And it's based on Twitter, because I've been getting a lot of questions about ETFs versus individual stocks. And this particular one is from Oh Hush, who asks, in this kind of market, what's your better gain, ETFs or individual names for a seasoned investor?
Well, I mean, I think that, first of all, because I am orthodox enough, I do want people to do S&P. I do S&P. The S&P 500 is terrific. It's actually an actively managed thing. When companies go bad, they get out, and when companies get a bid, they get out and replaced with a good company. So that's actively managed. I like it. But I do think that we have eyes, we have ears. We can hear, we can see. We know that people are working at home, so we can buy Zoom. I mean, it's one that I've been wanting to do for Action Alerts. Clorox. I mean, I need wipes. I'm using these 70% wipes from Walgreens. I think that they're insufficient. I don't want to get sick. You know that you had big lines of Costco. Okay. You know that Costco is doing incredibly well. So what do you buy? ETF that includes Costco? Well, that might include Kohl's, might include Macy's. So you need, first, bedrock is the S&P 500. And then on top of that, eyes, ears, homework. If you don't have it, then you have to do all S&P, or of course you can subscribe to Action Alerts, where we give you a recommended list that you can say, oh, you know what? I shop at CVS, it's packed. Or like, wow, they have Starbucks and it just announced a buyback. So, I mean, that's why we started the thing, is to show you how to think like a manager. And what's a shame is the industry has said over and over again that you can never think like a manager. Well, we'll show you how to think. And there's a lot of things. I mean, I would say that a crossword puzzle is harder than what we do. I mean, just you want a degree of difficulty. Maybe a really good cast when you're fishing is harder than what we do. Hitting a baseball, throwing. I'll tell you what's harder than what we do. Throwing a pitch 55 feet. I practiced forever when I threw the pitch out for the Phillies. That was much harder than picking a stock. Much harder. But you would think that one of these professors would say, you know what, here's the degree of difficulty. They make it sound like it's some sort of triple whatever in gymnastics or Greg Louganis died. No, no. It is easier than running take from taking the ball out of the end zone without a defense against you. It's easier than that. I am not minimizing it. That's hard for someone my age. So, I just want people to understand Dow down 1,000, people looking for opportunity, S&P first. I mean, I'm going to go talk to my daughter, and she handles her own money. I have no influence, but she's been asking me all morning, Dad, you've told me wait. Well, when? And I'm going to say, no, wait, there's this thing called the S&P. It hasn't taken out the 20. I want to take out 20. But I'm saying that, younger people, she wants to learn. She handles her own portfolio. I don't manage her. I don't know what she's doing. But like everybody else, they want to hear. And if they hear that panic isn't a strategy, then they can say, all right, well, look, TJX, all these stores are going out of business. Here's TJX. It's at 38. It's an incredible company. It's got all this cash. It's going to, maybe people can't shop right now because of the gathering rules. But here you go. I mean, it's at 38. It was at 64. I think that's a mistake that stock's that low. But if you buy it at 38, you may have to buy it at 30. So leave some room.
Thank you, Jim, and stay safe. Guys, every day Jim Cramer and I are working so hard to answer just some of the questions that you have about this ever volatile market and this pandemic. So please keep sending in your questions via Twitter at TheStreet or at by Catherine Ross. I am reading, I am watching, and I'm ready to ask your questions. And also, Jim and Jeff Marks, who is our senior portfolio analyst with Action Alerts Plus, are going to be hosting the Action Alerts Plus monthly conference call live at 11:45. This is not going to be one that you're going to want to miss for all the reasons that Jim's already laid out. I don't even need to tell you on that one. I'm Catherine Ross. Guys, please stay safe out there, and we will see you tomorrow.